Okay, the sound, I'm gonna see what is wrong with the sound. Can you hear me better now? If you cannot hear me or cannot see my screen, please indicate so that I can have that fixed before we commence. Thank you so much for your confirmation. So in today's live stream, we're going to start by looking at the US dollar, and then we're going to scale down to look at other asset classes and other currency pairs as well. So looking at the US dollar, the key levels that I'm watching. So first of all, I was looking at the gap right here, and I was anticipating to see what the market is going to do when we get there. And so far, as you can see, after price mitigated that key level, you can see right here we created a low, created a high, and then we broke structure right here. You can see we broke structure. After this break of structure, this right here was the last impulse move to the upside before dropping to break structure. And I was anticipating for retracement into this key level before potential continuation to the downside. And right here, you can see price came into that position. Usually I'm waiting for price to either mitigate the bodies of the candle or run liquidity resting right here. So it's either going to be a buy side or a sell side liquidity. And in this case, it's a buy side liquidity because we're looking for sells. So when we're looking for a sell, we're anticipating for price to run buy side liquidity and go to the downside. And if we're looking for a buy, we're anticipating for price to run a sell side liquidity and go for a buy. So if we're looking for a sell, we're anticipating for price to run buy side and go for a sell. If we're looking for a buy, we're anticipating for price to run sell side liquidity and go for a buy. So in this case, it's a sell and price took buy side liquidity resting right here. And after that, dropped down, came back again, took more liquidity, and then we had this drop to the downside. So after this drop to the downside, we had this daily inefficiency resting right here. I'm just gonna for 1 second clear my chart so you can see it very clearly. So we had this daily inefficiency resting right here. So I was anticipating for a mitigation of this daily inefficiency, and as you can see, price came in there, mitigated it, dropped to the downside. So I was anticipating to see a continuation to the downside, but for some reason, price still wanted to go to the upside again. So what I did, I went to the weekly time frame, and right here, this was the first candle to go to the upside to mitigate the gap resting right here. This gap, the gap on the daily time frame, you can see the blue line. Blue line is for the gap. So this is the gap on the daily, on the weekly. So now on the weekly, this candle mitigated the gap, and the open of this candle right here, you can find the open using this. So the close of the candle, this is the open, this is the close. If we go back to, so my interest is the close of the candle. I'm going to correct this. So what I'm anticipating is for price to either mitigate the open or the close of the candle before a continuation to the downside. So in this case, the reason I'm using the close is because this is the one that is closest to the high, to the wicks. So if the open of the candle was right here, that's the one I would have used. So the open of the candle is right here, and this is the close of the candle. So if the open of the candle was right here and the close was right here, I would have used the open. I don't know if that makes sense. If you don't understand what I mean, you feel free to ask your question. So whether it's going to be the open or the close of the candle, between the two, the only one I'm interested in is the one closest to the wicks. So if the open of this candle was right here, that's what I would have used. If the close of the candle was right here, that's what I would have used. So whether it's the open or the close, what I'm interested in is the one closest to the wicks that took liquidity, that mitigated my key level, my point of interest. That is what I'm interested in. Price revisiting that key level before a continuation. And in this case, you can see this right here is the close of this impulse candle that mitigated that daily gap. And I want to see price revisit that position. And if we now start to scale down to like 4-hour time frame, you can see the green line, which is the close on the weekly. And you can see right here, price came back in, mitigated it. And after that mitigation, we dropped down, we came back again into that position, we dropped again, rejected off that position, we came back again, the weekly close, and we still dropped to the downside. What does that tell you? That is telling you that this is something you need to understand how to use this in your trading. The open and the close, the algorithm remembers this key level. And the only reason why this is important is because you want to know key levels the algorithm can potentially come back into for you to take a trade or for you to take profit. So let's say you were on a buy on USD XXX pair and it comes into the open or the close and you're anticipating for a reversal. This will be a beautiful area to close and take profit and leave the market. And let's say you're looking for a sell on USD XXX pair or whatever pair, and price comes to the close like this. This sort of being a beautiful area to look for a sell and take it to the downside. You can see we came back again. This would have been a beautiful area to look for a sell, take it to the downside. And if you measure from the high to where we are right now, that's 567 pips. So anyone who took a sell from here is up 500 pips. If you took a sell from here to the low, you are up 700 pips. If you took a sell from here to this low, you're up 496 pips. So that being said, the next key level that I'm anticipating, I said this last week, if you use your Fibonacci from this low to this high, the next key level I'm anticipating for dollar to gravitate to is the equilibrium. This is the equilibrium zone. So this right here is the key level. Whatever trade I am on, if I'm on a buy setup on euro, gold, AUD, or whatever XXX pair, if I'm on a buy trade on them, the moment dollar is at this key level, I'll secure tangible profits. And the reason for that is because anything can happen from here. We could potentially see a reversal for price to even wipe out this high. I'm not saying that's going to happen, but that is a probability that could come into play because we have non-farm payroll this Friday. And when we have non-farm payroll, the market could literally do things you never thought it could do or thought it will do. So that is why we always try to be as careful as possible. We reduce risk very at the bare minimum. We use the bare minimum risk because anything can happen once we're at this key level. And as you can see, today is Monday. We could come into this position probably maybe on Tuesday, Wednesday, on Thursday, or even on that Friday. Price can come in here and mitigate this inefficiency. And you could literally see an impulse move to the upside for a run on buy side liquidity. So whether we're going to continue to the downside or not, price could still want to run liquidity from the buy side before continuation to the downside. Overall, I still remain very bearish on the dollar. I'm still very bearish, and I've stated my reason because we're still within this overall lower high and lower low range. So until price takes this overall high, breaks above it, closes above it, I'm still going to be anticipating for lower prices on the US dollar. So, but at the same time, anything can happen and price could spike up and continue higher. That is 1000% possible. But another reason why I'm still very bullish on the other pairs is because their market structure on the 12 months, 6 months, 3 months is very bullish. And I'm only focusing on the structure that I'm seeing is bullish. And I'm looking for a buy on them. And the structure that I'm seeing looks bearish. I'm looking for a sell on those structures. So that is what I'm looking forward to see on the dollar. Hopefully, we do see price coming to this equilibrium zone, and then we will be looking forward to see what is going to happen in the marketplace, whether price is going to give us an opportunity for dollar to go higher, or whether dollar is going to continue lower. So wait and see what's going to happen. The next one we're going to be looking at is Euro US dollar. So for Euro US dollar, we start from the 12 month, like us, just like we started with dollar on the 12-month time frame. You can see we've been consistently creating higher highs and higher low, higher low, higher high, higher high, higher low, higher high. So for Euro US dollar, I remember overall bullish on Euro US dollar. And if we scale down to the monthly, on the monthly, we have inefficiency, this last down close candle. And if we scale down to the weekly, so on the weekly, you can see the low, the high, price came down, broke the structure, came to the upside, mitigated this position, rejected, came to the downside. So two things are involved. It's either we mitigate this inefficiency. You can see this fair value gap right here. It's either we mitigate it and we'll continue to the downside, 100% possible, or we mitigate it and we'll come down into this level for retest, potential continuation to the upside. So we go to the daily time frame to see what's happening on the daily time frame. On a daily, we have a daily inefficiency, daily fair value gap. So you can see I outlined that daily fair value gap with a 30 minutes break of structure. Price came into that key level, and if we look at the 30 minutes time frame, you can see very clearly we created a high, a low, broke structure, left this inefficiency, price came down, mitigated it, expanded higher. So right here, I'm still anticipating potentially because of we have high impact news this week on the FOMC, on the non-farm payroll this week. Anything can happen. It's either price is going to just continue higher, or they could take price to the downside to run sell side liquidity, wipe out early buyers, and potentially continue to the upside. And when I say early buyers, I'm talking about buyers who got in at this key level. This right here is a low resistance liquidity. And because we have FOMC, I wouldn't be surprised if price wants to come down to run all the people that bought from this low, take them out, and then potentially continue higher. So that is why I'm gonna be watching Euro very closely, because even when I was using the line charts, trying to understand what price is doing, I'm gonna wipe the chart for a second. So if you look at the line chart right here, you can see we created a high, a low, and then we broke structure right here. And like I said last week, if you're using the line chart, I only use it to determine where the liquidity is going to be resting. And if I outline this liquidity right here, this is the liquidity. So, and we have low resistance liquidity as well resting right here. So if for any reason price should come to the downside to run this key level, I would have been anticipating for it to come in here. So I'm gonna put back everything on my chart, and then I'm gonna take us to the bar chart once again, to the line chart once again. So looking at it, you can see this is the liquidity zone I talked about a few seconds ago. This is the liquidity that I wouldn't be surprised to see price want to revisit this liquidity. It's not a certainty, but it's something that could happen potentially. And you can see right there, I've already outlined it as an entry. So if we do see price coming here, we'll be looking for buys from that key level. It's an if that happens, because we have non-farm payroll, anything can happen. It can drive price to extreme levels to wipe out anyone who's bullish or anyone who's already on a buy, to kill the momentum, the confidence, and make them be interested in selling, and then potentially reverse. That is 100% possible to happen. So that is why I'm watching this key level. And if price should for any reason come here, I'll be looking for a buy. Now, the next thing we do is to look for confluences, things that align with that key level. So you can see it's a 15 minutes. It's a line. It's a blue line. So if we start to scale down to the 5 minutes time frame, you can basically see that this key level right here this high, this low, this was the 30 minutes high and low that got broken. And after price came to the downside, mitigated this position. We want to see a 4 minutes or a 5 minutes break of structure from this key level. And after that break of structure, you can see high, low, then we broke structure right here. This is the break of structure. So after this break of structure right here, so I'm gonna label that break of structure. So after this break of structure, we anticipate for price to come in here, right here. Now look at what's right here. Remember the blue line is the liquidity. That blue line is liquidity. Recall that is the liquidity. Now look at what we have here, the bodies of the candle of the last down close candles before expanding to break this structure. So this key level, I won't be surprised if for any reason due to the high impact news coming out this week, if we don't see a continuation to the upside, and if for any reason price starts coming down, this would be the key level that I'll be looking forward to see the market come into. And if we come in here, I'll be looking for a buy, and I will put a limit order. If I do see price coming to the downside, I'll put a limit order at the bodies of the candle. I'm not going to put it exactly at this blue line. I'm going to put it at the bodies of the candle, which is right here, which is literally a few pips above that key level. So I'll put the limit order right there. And then one price we test this blue line, I'll scale down to even 2 minute time frame. And on the 2 minutes time frame, I'll be looking to see a 2 minutes break of structure. If I do see a significant 2 minutes break of structure on the 2 minutes time frame, I'll look for re-entries as well to enter the market. So this is what I'm watching on Euro US dollar. And if you do have any questions, feel free to drop it in the chat. So the next one, we're going to look at GBP US dollar. I talked about GBP US dollar on Friday. Talked about the key level I'm watching. I was watching this green line. I wanted to see a retest at this green line, but for some reason, price came very close on Friday, but it didn't tap into that position. So it's either we're going to continue higher, but I'm still watching this key level. I'm not removing this on my chart. So you can see my alert is still there. If for any reason price revisits this key level, maybe during the high impact news or before the high impact news or sometime this week, if price comes in here and I still see this 5 minute shift to market structure, I'll look for a buy for it to continue higher because I'm still very bullish on GBP US dollar. My analysis on bullishness on GBP US dollar still remains the same. So that is what I'm looking forward to see. So we'll look at gold. For gold, so right here on gold, this right here is the daily open. Go to the daily time frame. So this was the daily candle, the last daily candle that went to the downside. This is the open, and I was anticipating to see whether price is going to reaccumulate below the open. And funny enough, that's happened. It came into the open of the candle, mitigated it, and we saw this expansion. I'm not buying this right here, not because it's not a good buy, but my personal opinion, I'm not buying it right here. The reason is because I feel like price is inducing a lot of liquidity to the downside. For some reason, gold likes to do that mostly before a high impact news, and they usually use the high impact news as an excuse to drive price to extreme lows. And if we're looking at gold, even on the line chart, you can see there's liquidity here, liquidity resting right here. So the only reason I use this line chart is to see where the liquidity is, because it's very hard sometimes for new traders to know where the liquidity is resting. And a lot of the times I've been a victim of price wiping me out, going towards my direction. And I've always been wondering, how can I be able to see this liquidity before it gets taken so I can know where it's resting in order to wait for price to come, take the liquidity, and then I enter. And in this case, this is one beautiful way to find out how. And when I learned how to do this, it was really incredible for me because it was an eye opener for me to see this. And right here, I'm seeing that liquidity still resting right here. And each time price comes to the downside, it's accumulating more liquidity to the downside. So we literally had this one on Friday, and then it's dropped another one here today as well. So whenever price, if it's two things are involved right here on gold. One is we just continue going to the upside, and then the news driver takes us to explosive levels, to just explode and really go to astronomical levels. That is the first option. The second option is these liquidities right here. Price intentionally accumulating more liquidity right here, only to now use the news as an excuse to wipe them out and then potentially continue high. So if we do see price coming to this key level, then I'll be looking for a potential 3 minutes breakup structure. But I'm still going to place a limit order right here, probably risk something between 0.1 to 0.3. And if we do come in there and then I see a 3 minutes breakup structure, I'm going to accumulate more long positions for price to continue higher. And my target is going to be the low resistance liquidity resting right here, which is all-time high, and potentially price continuing to go to the upside. And after this level, the next key level I'll be anticipating to see gold gravitate to would be 2,500. So that is my analysis on gold. And if you do have any questions, feel free to drop it in the chat. So looking at AUD US dollar, everyone got into this beautiful trade, resulted into a 1:11.5, beautiful trade setup. And I'm still holding some of I took profit on my own personal account. I took profit, but I've not fully closed the trade. And the reason is because I'm still very, very bullish on AUD US dollar. Like I think it hasn't even started the bullishness. We've not even, this is just like a preamble. This is just the beginning, because how high this can go is really astronomical, but I can't really tell the members to hold a trade for that long, because this trade could take months to play out. And I feel like a lot of people will not be comfortable holding a trade for that long. But personally, I'm still holding this trade, and I'm just going to be scaling out profit as it goes higher, because I still believe AUD US dollar is very bullish. I've taken a lot of profit off the table, risk of stop loss to break even, take profits secured, everything. Even if price reverses right now, I'm still going to leave the market with profit, because my stop loss is in deep profit. I've also scaled out some profits as well. Even today, this morning, I took some profit off the table as well. Because one thing in trading is you have to always pay yourself, because if you don't pay yourself, the market could take out everything you've earned, and then you basically spend all that time for nothing. So that is why it's very essential to always take profit, even if it's very small, even if it's 5%, 10% is something. At the end of the day, you just make sure you pay yourself. So for AUD US dollar, I'm still very much bullish, still anticipating for it to continue to the upside. If I do still see a re-entry as well, I'm still going to share with all the members as well, so we can all make money together. So that is what I'm looking for to see on AUD US dollar. Not really much. Right now, we're just creating higher highs and higher low, and consistently creating higher. So I want to see this low resistance liquidity. I want to see price run above this low resistance liquidity. And once we run above it, I'm still going to take more profit off the table. And then I'm just going to be watching on the sidelines and allow price do its thing. I'll just keep taking profit and allow the market to do whatever it wants to do. So the last but not the least for this live stream is NAS 100. So I'm still holding on my NAS 100 trade, which is in a very nice profit. So far, it's in 1:9 risk to reward ratio so far, which is absolutely beautiful. So I just feel bad I wasn't able to post this trade for the members, because I was really rushing for this trade because of the entry. It was really fast, and it happened around 4 p.m. London time. It happened around 4 p.m. London time. So I just wasn't able to. By the time I finished typing it to send out to the members, price has already left the entry, and I just felt like there wasn't really any need sending out a trade entry that they won't be able to get in. So that's really why I just couldn't send it out to the members. But I'm still currently holding this trade. I'm still holding it, and I'm still anticipating for an expansion, low resistance, liquidity resting right here, inefficiencies. So once we're in here, I'm going to take some profit off the table, but overall, I'm still anticipating for the low resistance liquidity highs to get wiped out eventually. So whether it's going to be today, tomorrow, or sometime this week, I wouldn't be surprised to see a new all-time high from now to the beginning of the next month. So that is what I'm watching on Nasdaq. If you do have any questions, feel free to drop it in the chat. I appreciate you all for tuning in today, and I'll be talking to you in the next live stream. Have an amazing day, everyone.